Hey, welcome everybody to the 40 Finance channel and this stock market live stream. Just thought I'd hop on here for a little bit, had an extra hour here in the afternoon, and looks like, things were going pretty well for the past 24 hours or so. Biden just came out talking about more taxes, essentially for rich people or wealthy people, taxing the capital gains rate. I haven't read the full article. I'll show you a quick little, hey Andy, Tom Brady. I was just looking over this Biden tax proposal. Let's see. Joe Biden would propose increasing corporate tax rate on wealthy individuals. I don't know what corporate tax rate has to do. This must be a typo. It should probably be capital gains. Increasing capital gains tax on wealthy to 39.6%. This would apply to those earning at least $1 million. Current base capital tax gain is 20. So sucks if you make at least $1 million a year. Luckily for me, that is a non-issue. The only thing that it probably does in the short term, first of all, it's a proposal, right? Let me double check that. Yeah, it's a proposal, so it would have to be passed through the Senate and all that. But I'll tell you where it probably would start to hurt is some of these high tax locations, such as New York and California, that are already struggling with people moving out. You start adding this onto it, and places like Florida are going to get a lot more popular. And in fact, any state that wants to take a stab at changing their tax code to help the people in this situation, those states would have the opportunity to do really well. So it's an interesting thing about America that states have different tax codes, and depending on what state they are, they could actually compete for business. Business being individuals, wealthy individuals who own multiple businesses. You can, pitch them, try to lighten this load that Biden's proposing. So it'll be interesting. That just came out at 2:15 today, at least according to Yahoo. So if you make over $1 million a year, look out for that. Just to be clear, though, it is a headline. It is just a proposal, and probably wouldn't be in effect until next tax season, if it even makes it through getting all the votes, right? So checking on the comments real quick, because I saw Andy got into SmileDirect under $10 after sold them at 13. Yeah, that's the SmileDirect thing is kind of, I'm getting a little impatient, but I'm not selling. But I'm going to jump into that because somebody asked me on the video comment yesterday. Let me try to bring this up. Let me format it better. Sorry. Yahoo has so much crap at the top of the screen that when you're trying to do a screen share, like you have to adjust the screen to like take the top third of the website out. So anyway, that's my problem. But so SmileDirect, I've pitched this multiple times. It is a stock that I own. And really what happened to this stock outside of the standard pandemic, which you see right here, is the fact that when COVID came, not only was there less interest in a vanity product such as a teeth aligners, because nobody was going anywhere. There was no high school proms, there was no family reunions, weddings, etc. So their sales tanked. They also had an issue where a lot of folks go to the dentist or these smile shops that they have, which obviously had to close because they would just prefer to not do it over the mail. They would rather, get 3D scans or whatever the hell's going on. I thought some of those problems would have went away for Q4, which would have been, October, November, December. and they were still struggling on their Q1 report. Now we are, what do we got? May 10th is the next earnings call. We are now in full bore stimulus, tax refund, summer's coming. I'm expecting big things. So to Andy's point on getting in under $10, that was, doesn't show on this chart, but I do believe, let's try this one. Yeah, April 20th, it got under $9. And I was going to put it in my recent video on stocks under $10, but when I was recording it, which was yesterday, it snuck above to 10.23, so I held it out. But it's a good one. I was lucky enough to buy shares and have like a $7.50 cost basis, something like that. I bought in the fall. But if you really dig in, and this is just the simple like Yahoo metrics, but if you really dig in even to revenue, this company for the next several years is going to be plus 20% revenue growth. And that's probably a little conservative coming off of the COVID downfall that they had. If they can show some progress this year, faster than they did in Q4, 2022 has an outside chance of being profitable from an EPS perspective. So you see the high estimate is actually 14 cents. So I'm, sort of welcome you, Andy, to the SDC club. I'm in. Some people were asking me about it on little video comments and whatnot. I'm not going anywhere. I think that regardless of what this earnings season brings on May 10th, I expect to see progress or else I'm really going to be pissed off. But I do expect Q2 and Q3 to be strong, right? Because the wedding season is kicking back off. And if you've ever hung around any girls who are getting married, I mean, they'll do anything in preparation, even if they're not the bride, right? They're the bridesmaid, they're the whatever. Any sort of vacation. If people are going to make this move with teeth aligners, I feel like it's now or never. So it's up to SmileDirect to really jump on the gas here, and I'm hoping that they do. We'll find out more on May 10th. All right. The other thing I wanted to bring up just very quickly that's made me a little bit mad this week, I guess you could say, is this notion that Netflix sucked at earnings. And let me see if I can pull up here, this is a good one. This is from TipRanks of all people. Okay, so Netflix misses big on Q1 subscriber count. Sorry, the way that I've put this up, you can't see the headline. Let me fix this stupid Yahoo site. There you go. Netflix misses big on Q1 subscriber count. And they did, okay? First of all, these are guesstimates that analysts put together, but let's get to the bad news. They added 3.98 million new subscribers, far below 6 million, and they guided for just 1 million new additions, roughly 4 million less than the consensus. So this is the COVID pull ahead, right? But this is what no one's talking about, and it really makes me mad for some reason. On the other hand, revenue hit $7.1 billion, representing a 24% year-over-year increase, beating forecasts by $20 million. Additionally, Q1 GAAP EPS came in at $3.75, ahead of the street's call by 78 cents. So I'm sorry, people. I don't give a shit about the subscriber numbers, okay? They are printing money right now. And subscribers is a vanity number, right? If this was Snap or something like that, a company that's still growing into profitability, then yes. subscribers are a big deal because that company still needs to build an audience. Netflix has an audience. And guess what they're doing that not a lot of companies are not doing these days? And that is making money to the tune of $7 billion in a single quarter. $7 billion in a 3-month span. And I'm sorry I'm so fired up about it, but it drives me nuts the way the media, one person did a headline like this and every media outlet comes in and reiterates it, right? I've listened to podcasts where people are like, this is the end of Netflix. The growth is over. Now it's, like they're going to be an IBM or a dividend stock tomorrow. I don't get it, but, I'm partial to Netflix. I do believe it's one of the better deals in the market. I still stand by that. But I just had to share my opinion for a second on what I think is one of the most misleading headlines so far in this earnings season. All right. Try to bring it back to positivity here. All right. Tom Brady, it's way more than that in some states. I know these comments are like behind everything I say, so I get it. And you were talking about taxes, I assume, which is correct. New York and California, super high taxes. I'm sure there's others that I'm not familiar with. It's interesting, guys, here in Ohio, I live in Cincinnati, Ohio, and Ohio, like small business tax credit is absolutely insane. So I have a couple small businesses. One is really my wife's that I run, and all of our small business revenue under roughly $250,000 or $400,000, something like that. It covers all of our small business revenue. It's tax-free at the state level, so it's exempted. So, anyone who's in Ohio making W-2 income, they have their normal taxes. Anyone who's in Ohio with, a barbershop or small business or whatever, assuming they're not making millions of dollars at their barbershop, they are making it free of Ohio taxes. And that is because there's a program in Ohio that's been continuously renewed where they're trying to attract new business, small business to Ohio. And in cases like mine, where you're talking about, relatively small businesses, then almost everything you make is free of state taxes. Now, you still have to pay federal, right, at the same federal guidelines and all that, but it's nice. It's really, really nice. And I'm sure there's other states like that, but if you don't mind, roller coaster weather, then Ohio is an option. If you don't mind 100 degrees in August and negative 20 in January, it's a very good state. Okay. Andy, gold seems nice. And you were talking about that, Andy, on maybe a comment a couple weeks ago. And I'll tell you what, I kind of agree with you. I've never really been big on metals. Let me play the screen game again, guys. Sorry. I've not been a big precious metal guy typically. Fixing this. But if you do look at the price of precious metals, like gold, trying to get to it. Excuse me. Look at that chart. Excuse me. So 1-year chart for gold, the low during the pandemic, let's go back farther. The low in August of 19 was 1,500. The peak was not even 2,000. It dipped as low as 17. It hasn't run up that much. It really hasn't. And then I'm pretty sure it's the same thing for silver. Let's take a look. Yeah, silver pre-pandemic, $18, now $26. I think that there's definitely room in your portfolio for some of these precious metals right now because they haven't run up. If we really are going to have inflation and it gets out of control, you know, a certain percentage of these precious metals, I would be most likely to buy an ETF of them as opposed to having like gold coins and stuff like that. My dad did that. He was a precious metals guy. But he held all his in physical and different coins and whatnot. I would be more inclined to buy the gold ETF just because for me it's easy and I like to keep all my numbers in my stock account so that when I get my tax documents at the end of the year, I'm not getting it from 7 different places. And honestly, it's just the way that I play it. Now, the one advantage to gold physical, if you can hold it and you can pay cash when you get it, you know, there's a way to play the game on taxes with that that maybe nobody would see exactly what you made off of it, but you know, that's a decision you have to make. But you can go in technically to a pawn shop or a gold dealer, a coin dealer even, and pay cash for your gold. And then you could sell it, ideally for cash, to someone if it did go up, and you would have a transaction that would be very hard to track from a taxation standpoint. Put it that way. All right, Lion, how you doing? Bought 10 Disney shares at 184 because I wanted to start a position. High expectations. I like Disney a lot. And I don't know, you guys know me well enough. It's hard for me to get super excited when the price ran up as early as it did. But I can't blame you, Lion, for a long-term hold in Disney. I mean, just phenomenal company. I wish that it was more like 1 January would have been a little more ideal for me personally. The fact that it's this far over pre-COVID kind of irks me a little bit. But, you know, they are supposed to, if you can hang on till, 2022 and beyond, I think that you'll have a good steal in here, even at 182. There's no doubt that Disney is going to make good money. I don't know what the theme park rules are now as far as capacity, but that's the only thing about buying a stock that's hot is there's nothing wrong with doing it, even though I get kind of pennies and nickels on everything. You just need to hold it for longer. That's the only difference to really get full potential. I mean, 182 for Disney come September of 2022, probably going to be a good price. And their earnings will probably substantiate that level by that time. Just right now, it's running a little bit ahead, but I'm with you, Lion. I like it, and you still have growth there. I didn't look at their projected growth. It's kind of hard to tell because of how far COVID tore them down. This year, Yahoo's saying the consensus is about a 5% growth over last year. I wouldn't be surprised if they beat that. And then next year, plus 25%. So definitely good signs there. Tom Brady heard rumors Netflix is getting into gaming. I wouldn't put it past them. By the way, like even if you disagree with me fundamentally on Netflix and you hate the company, go read the interview or whatever the transcript for the conference call back over on the questions side. Because Reed Hastings, I mean, that guy, he answers stuff. He doesn't do the blow off answers. And he also talked about how COVID affected production for new shows. So, and it makes sense. I didn't even really think about it, but actors couldn't go to work in the COVID environment because, of course, they're acting. You're not going to have a freaking mask on in the middle of a movie. So a lot of the stuff they had planned from a content standpoint, they couldn't even film it. And so he's expecting the back half of the year, they'll have more launches, releases, and that makes sense to me. So, and he was very candid about competition. Interestingly enough, people were doing the questions, they were pushing hard on Disney, like, are you scared of Disney? Are you scared of Disney? And he came back and he was like, we've been competing with, not Spotify, Hulu. We've been competing with Hulu for 10 years. They are a formidable foe. And we've been competing with Amazon Prime for 10 years, and they're, formidable. So we're not scared of competition is about the gist of what he said. And I thought those were all like very real points. I could see, and he also brought up YouTube as the top competitor, so I just felt like it's super down to earth. And from my vantage point, I would say that Netflix is more ubiquitous than Disney, not because Disney has anything wrong with it, but just because if you go to like a hotel, like a Marriott hotel or Hilton or something, they actually like have the Netflix in the room now, and you can just log in with your Netflix password and watch your favorite shows on the hotel TV. It's everywhere. If you go to the streaming reports, every once in a while on my Twitter, I'll post the streaming, top 10 of the week that comes out of Nielsen. Netflix is like 7 out of 10 shows, like every single time. And Disney will get the WandaVision here and there, but they're not morons, okay? And they're not giving up. But check out that conference call or read some articles about the conference call, because you'll pick up some interesting information, at least where Reed Hastings was answering questions. All right, we have OMG Danny asked for our first stock pick today. So I'm going to look at PATH, just following up on Lion. Also, Texas and Florida are the best states. I'm Canadian. Oh, that's right, you are Canadian. My understanding is Canada's a mess right now, in the sense that a lot of people are disappointed in the restrictions. You'll have to let us know, Lion. But some of the stuff, on Twitter, you'll see stock market people who live in Canada, and they're like, I'm out this summer. I can't believe we're locked down. I can't believe it's this and that. You should go down where Andy lives in Florida, because Florida is like zero restrictions, just to put it mildly. All right, so Danny, let's take a look at PATH. I'm glad it's not a penny stock, so you're off to a good start with me. Let's see what we got. Brand new one, IPO, April 19th or so. And let's see what this company does. We make software robots so people don't have to be robots. Fully automated. Robotic process optimization. Okay. Pretty good line of clients. So interesting. It looks like it takes some of your coding tasks and automates them somehow. So very interesting. I don't know 100%. I can't say I've ever seen this company before. It develops RPA developers looking to build complex automations. All right. So I like the concept. Let's take a look at the little bit we do know about them. You had, where are we at? I want to make sure this shows up on the screen, so I have to look at two screens at once. Trailing 12 months revenue of $600 million. No information on cash or debt. That might be, that could very well be in their earnings report. There's not a lot here. I mean, you got 58, 57x on sales, which seems kind of high. But since this stock is so new, it's really hard to take any of these for, much more than a guess. I'll type it into TipRanks just to see what they say. Try to at least help you out a little bit. I don't think I have an opinion. That's for UK Path. Yeah, TipRanks doesn't have it either. So unfortunately, I don't have enough information on it. But it must be something special because you've got an IPO that came out 2 days ago that's already at $77. So there must be something exciting going on. Sorry, I don't know more about it. All right, Hosea, are you in cryptos? I've been researching Cardano. I am not in any secondary cryptocurrencies. I know that world is absolutely on fire right now. I was reading some stories about some folks that just went like on TikTok or something and just did like a screenshot of his account. It was a guy in Reddit. And he was like, yeah, I just wanted to join in. I own some cryptos, so I just kind of started an account. I was like, hey, here's my account. Here's the ones I like. And he got like 100,000 followers on just like a basic message that he wasn't even like saying, I'll teach you how to be a millionaire or nothing. It was just like, here's my account. These are the ones I like. So crypto is on fire. I recently saw, this is from Medi. Hopefully I'm saying it right, Medi. I saw your 5 below analysis from a year ago. I'm a contractor and I see lots of construction plans for new locations. Let's take a look. I haven't looked at 5 below in a little while. Generally speaking, I like the company. They have these here in Ohio. They're very clean stores. The ticket, what's the word I'm looking for? The ticket sales on it, or your average ticket size, or whatever you want to say. I have little kids. By the time I get out of there, man, you'd be surprised how quickly you blow 60, 70 bucks at these stores. And you really don't walk out with anything. But kids love it. So, it's went up quite a bit, 194.58. P/E ratio right now at 88.45. But this is pretty interesting because these are all physical retail, right? And they're still doing well. Let's see what they're calling for. EPS set to double, basically. 421, slow down a little bit here to 512. 35% sales increase this year. I'm sure that's because stores were closed, but that's impressive. It's certainly growing in the right direction. 195, so you could just, a lot of times they'll do something like this. Take 421 divided, let's just pretend it's an even 200. So you got a forward PE of about 50. If we look at our stats, we switch to annual, a forward PE of 50. So it's definitely running higher than it has in the past. So at this level, it's going to be very similar to Disney. At this level, you either need them to outperform the current projections, or you just need to hang on to it for plus 2 years to kind of maximize your gain. Let's see how the finances look. Almost $2 billion in the last 12 months, which is great. $400 million in cash, $1 billion in debt. But, for me, it's more of an eyeball assessment. How much revenue is coming in every year? About $2 billion. You got $400 billion in the bank. you can certainly cover this $1 billion in debt. So I don't think the debt's too bad. Just out of curiosity, short percentage of float, 6%. I don't know, it looks okay. If anything, I would say that Five Below right now is reasonably valued, right? I wouldn't say that it's on sale. Hasn't really went down too much in the dips that we've had this year. Here's that early March dip. You got down to 183. So, yeah. If you really want to pinch pennies, you can buy a couple shares at this price, then hope you see this again, 183. But you've got some good inside information if you're working in construction or you're a contractor, it says. If you know that there's a lot of locations coming up, then that could be very good news. So that's the kind of stuff that, maybe you start small position, buy a few shares, see what happens in the market. I think the market, it always has that 50-50 scenario, right? Could go up, it could go down. Everyone's opinion's different. I would say it has more room to go down from the way I'm looking at it than it has to go up. But doesn't mean it can't go up. So just spread your wealth a little bit and try to average. Hosea, copper. That's a good point. We were talking about metals. I didn't look at copper, but the only thing I worry about copper, and I don't know enough about it, is I know that a lot of copper applications are being swapped out in the home building side, namely plumbing and some HVAC because of the cost. But I'm assuming that that's because the cost of copper supply has gone up, so they're trying to save money. But yeah, I think precious metals to a small degree are worth your time. You can always try to do the physical or buy some coins at the worst case and put the coins in a safe at your house and save them for your kids or whoever. Hopefully you just wake up in 20 years and they'll be worth more. Howard's a little upset on the taxes. I understand. BR, I don't know what that means. Andy, do you like crypto? What are your thoughts on Coinbase? Under 300. Coinbase has sort of struggled out of the gate. What I like about Coinbase for a guy like me personally is because I don't hold individual coins. I kind of see like Coinbase as like this big crypto ETF in a weird way. I was surprised how high the price came out. They were anticipating 250. That might have been where it started at. But I don't know. This would be one that I wait and see. There's definitely some holes in the strategy as far as, looking at, I think I see, let me just try to squeak this in a little bit. So last year, I really do believe that last year for a lot of investments was an odd year. So can they match? Can they keep growing from 2020? Does their fee structure start to interfere with their growth? I don't know. So it's not one for me right yet, but I will say one thing. This company is, for an IPO, to come in at $127 billion in revenue, that's pretty outstanding. Cash position looks good. Debt position looks good. They don't have short information on it yet, probably because it's not even a month old. This profit margin, when I did the review video, this profit margin's unreal because it's just basically a service fee, right? They don't have to make anything to charge a service fee. I do worry about the future a little bit, but the articles that I read suggested Coinbase has 20% of the market, which is really, really good. It doesn't sound like a ton, but in this very dispersed crypto environment, 20%'s a lot. So I like it in theory. I can't get too excited at 290. At 290, I would probably buy something different for the long term, but it's worth watching. Oddly, if I was going to take a chance, I happened to catch this out of my eye. If I was going to take a chance at a stock at that level, it would probably be Airbnb, which doesn't nearly have the same financial foundation that Coinbase does. But if I was going to go for a company that had a high amount of risk, I would say that this would be one of my picks. And I very may well get into that Airbnb at some point. But you've seen Airbnb's one of the ones that's had the weakness, right? When the stock market's gone down in the beginning of March, and then we saw a little bit last week or the first part of this week. Just look at your stocks. Which ones went down the most? Those are going to be the ones that are going to be the most volatile for the rest of the year. On my end, that was Enphase. And although Enphase bounced back, who else got hit hard on my end? DraftKings has struggled a little bit lately. It's back to 57 today. But I called that one. I said it could go under 50 to the high 40s, and it doesn't look like it will right now, but Square's in a good place now, but a month ago it was $200. So for me, those are like the big companies that come out and they're always going to be fluctuating. I think Enphase back on solid ground at 160 temporarily because Biden, man, he's coming out so strong on the environmental stuff, and people are looking at companies like Enphase and getting excited. So we'll have to see. When is Enphase earnings will be interesting. April 27th, so 5 days from today. What's the date on that? Tuesday. That'll be interesting. But for me personally, the best thing that happened to Enphase is not the rumors of Biden's environmental plan. It was that he extended the tax break for solar installs on the residential level. I think they're locked and loaded for 2 more years, period. And there was talk about extending it out for 10 years. And if that happens, your Enphase, your Tesla, anybody in that game is going to be in good shape. So I don't know if you guys noticed, but Musk came out yesterday, day before, and all of the Tesla solar, residential solar systems are now going to be, what's the word I'm looking for? Like, you can't use them with other companies. So Tesla products will only work with Tesla products across panels, inverters, power storage, all that stuff. So if you want Tesla panels, you'll have to buy the whole Tesla system. And he said that on Twitter. I don't know when that starts, but that's going to be interesting. I don't know if I agree with that move. In an industry that's growing, I would rather be Solar Edge or Enphase or somebody who's like, hey, there's a big project happening. Let's go get 10% of the budget and we'll sell inverters to them or storage to them and walk with our money. But hey, who am I to question Musk? I mean, his stock's on fire, so good for him. All right. Sniff. I bought some of the stocks you mentioned last video that are $10 and lower. Feeling good about TBLT and AQT. Nice. I made great gains with Bitcoin. I purchased it when it was at 10K. Good for you, Sniff. I really like, you picked 2 that I like a lot, but this wacky AQT really stands in my brain for some reason. I think that this was the Aqua, now I can't find it. Oh, I have it on one of my watch lists. But this was the salmon fishery. Let me get it off one of my watch lists here. ASPU. I have a little penny stock watch list. Where the hell is it? AQB, which I assume this is the one you're talking about. I like this company. I need to read more, but this was the one that does the salmon land-based fish hatcheries. Last year was a disaster on earnings. Little negative there, but technically they are supposed to bounce back, and I'm guessing that has a lot to do with restaurants reopening, right? So farm-raised salmon, no contaminants from the ocean, no, antibiotics, or God knows what's in the ocean anymore. I like it, and analysts anyway like it as well. AQB. So whatever, this is only, this is a mixed bag. Two people, one guy's in, $15 target, one guy's a hold. The revenue and EPS is really what got me if you watch that video. This is what shocked me down here. Last year, 128K, so basically nothing, to 5 million to 10 million. So the sad part is we've only got 2 people who have reached this consensus. So there is risk there, obviously, but the concept of not having wild caught salmon, I think really resonates with the world today. That, you're whatever, just environmentalists and whatever. I think it's just a good message. So I need to read more, though. I need to read just one of their investors' slide presentations, and then I'll probably pick up some shares for fun. Because if they could turn this thing around, I mean, how much salmon is freaking eaten in America like daily? If you count restaurants, grocery stores, whatever. I know it's very healthy, and I know that it is a alternative to red meat for a lot of people. I'm not sure on the religious section of things what the codes are there, but there's several religions that don't eat red meat, and some of them only eat fish or seafood. So I think salmon is going to be, the type of thing that's not, the demand for it is not going to go down. So anyway, Sniff, thanks for sharing. Then the Tough Built Tools, I like that one too. It's like 75 cents. It's almost like, who cares? It looks decent. You might lose a couple bucks, but there's worse things in the world. Hosea is talking about, Hosea's pimping my channel for Charles Hoskins. But anyway, that's okay, man. I encourage everyone to listen to as many different people as you can. That's the best way to learn about investing. Lion bought some AT&T long-term hold. The one thing I like about AT&T, and I think this is true, but don't they own HBO? I think they own HBO, which from a streaming perspective, I think could do well. I cannot believe that AT&T finally beat an earnings call. I feel like it's been 29 quarters since they've done that. And obviously, if you're lying, you're getting a hell of a dividend with that one. Sniff is gradually exiting out of crypto, getting bad vibes. I can hear you there. Tom Brady, EXPI. I think this is the real estate one. I've seen this company actually has, let me fix that top bar for the 12th time. This company actually has some listings in my area that I've seen their signs. Let's take a look. This is right up there with your Zillows, Redfins, etc., if I'm not mistaken. Just just going to peek at their website, make sure it's the one. Yep. EXP, and they also have these too, those properties. But the big play is real estate. If cloud-based real estate brokerage service for residential homeowners in US, Canada, UK, Australia. So decent footprint there, to say the least, all those countries. Price at $33. How old is this one? This one's been on the market for a while. $4 pre-pandemic, or right at the tip of the pandemic, shot up to $75. Now you're getting down into the 30s. So I'm guessing Tom Brady sees an opportunity here, which is hard to argue with. Because you're back down to, I was just trying to measure, looks like you're back down to, December levels, even arguably a little November. You got a positive EPS, which is right up my alley at 21 cents. You hit 1, 2, 3 of the last 4 earnings. Definitely want to make sure we understand what happened here, because these are big jumps if you look at the graph. Negative. So you had 3 straight negative or not profitable years, which is understandable. And then you have hit profitability. So I do like that. Let's see what people are projecting. It's the housing market. So I'm currently getting screwed on Rocket because nobody believes that the housing market is sustainable. So I'd struggle to jump in this one because I'm already getting hard pressed on Rocket, but this looks good eyeball-wise. 21 cents to 40 cents to 73 cents next year. Sales growth, very strong. 50% this year, followed by 27. It looks pretty good. I mean, if you wanted to say, I was going to try to see what the forward PE is. It's in Zillow territory. I would probably be most inclined to buy Zillow, but I also don't know everything about this company, like what this is, for example. Verabella. It's like a 3D meeting platform. That's definitely not for me, but I can see how it'd be popular. Success is some sort of website. I don't think, nothing wrong with that. I just don't, it's not going to make as much money as real estate, right? Find your home. This is where the money is, I'm guessing. So with that in mind, I would likely shift towards Zillow. However, I've seen a lot worse companies than this from the eyeball view. Let's see what TipRanks says. EXPI. Wow, only one analyst on this one. Hold on. There we go. Just have to get the lower star guys in. 1 month ago, Tom White, anyway, thought that it was $67 stock. Now, 1 month ago, this one was higher. 1 month ago, they were at 49 when he made that call. So I'd keep watching it. I mean, there's definitely worse things in the world than this stock, and they are headed in the right direction as far as earnings per share, growing revenue. I did not look at their debt and stuff. It looks okay. Got $5 million in debt on $2 billion, roughly $2 billion in revenue. A little low on cash at $100 million. But yeah, dig into that investor report. When's the next one coming? Oh, they had an earnings on March 11th, 2021. Did that happen? Oh, their first quarter is on May 6th. That must be a Yahoo error. So you'll find out a lot more on May 6th. But unfortunately, if it's very good news, you're not going to be able to get it at $30-some. All right. Bull runs are hard to time. I like Cardano because they're announcing Africa project. I don't know anything about that. I'm sorry. Might keep my Digibyte and Zilqua. You guys are crazy, man. I love it. I don't know any of those. So unfortunately, I'm out on providing any value. Derek's here. Good to see you. How am I looking at the next several months? Do I expect more volatility? This month, so I changed my mind a lot. This month, I thought the market, when the market was slipping, particularly earlier this week, I thought, okay, this is the sort of back to reasonable valuations, but then it's bounced. And it's 408. Where did we land for the day? NASDAQ ended at minus 0.94%. I still think stuff is high, but and this will be my next video. I'm going to spend some time researching tonight on whose forward PEs and earnings look the best. So obviously those are estimates, but it's going to take a lot on some of these companies. It's going to take a lot of outperformance to justify the current valuation, and that's where I get nervous. So I'm ready to go at any time, but I don't think I've bought any stocks in April. Excuse me, I bought some Palantir on Monday because it dropped, but I am sort of holding pat. Getting some stuff done in my house too over the summer, so I just want to make sure that I have plenty of cash around for that stuff. So that's how I'm looking at it. We need something's going to have to give here heading into summer, right? And there's two options. One is the earnings come in as the stock market suggests they should be coming in, which is much higher than what's projected. That's option number one. Stocks stay the same. Option number two, earnings come in lower than what's projected. Stocks will go down. And I think that on some of these companies that there's some pill swallowing that needs to be done when you are running at 250, 300 PE on a forward level. When you're up that high and you start to have earnings report after earnings report that says, you know, we're doing good, we're not doing that good, then the stock price is going to come down. I just don't know when it's going to be. I doubt it's in this quarter because this quarter only represents January, February, March, the reports we're reading right now. So if you're a company, you can still give excuses, good excuses for the last 90 days. But when the June season comes or the July, people, you better have it. Like if you're a hotel, airline, whatever, you better have those numbers. And they have not been putting them up yet. So we'll see. If you're bullish, then you say, don't worry about it. Everybody, they're going to hit the numbers. Everything's going to be fine. If you're like me and I get a little antsy, I want to see some evidence before I pay so much more than what I think is a normal historical valuation. So that's my take. The example from Disney today that Lion bought in was perfect. Definitely running above its current valuation. I think that EPS was in the $4 range, right? It's a $180 stock. That's tough for me to do in my head, but it's roughly, you know, a 45 PE. Historically for Disney, you're in the 30s, if not the 20s. So I don't know. Will Disney outperform? Will they actually be what the street is saying, $6 a share? Can they get that high by the end of the year on the current projection of $4.20? That's a lot. That's a lot over. And if they don't, then a little bit comes off. I mean, Disney's not going to crash to zero. There's no one's concerned about that. But they'll get dinged along the way. And if you're lying and hopefully you're holding for 3 to 5 years, then it doesn't matter, probably, because they'll eventually make the money. But if you want to be in positive equity all the time, like I try to be, when you get in is something. Some people don't care, I care. And I don't want to be in negative equity on my positions, ideally for too long, right? Too long meaning like a month or two. So that's my take. All right, I'm going to skip ahead. Ben's buying Coinbase around 250. I think every price around there, you have to think about it. And like I said, I would buy it and call it my full crypto ETF, right? Because the guys that we're talking about, I might keep my Digibyte and Zilliqua. Like, I don't even know what that is, right? But if I have Coinbase and those two coins did well and they had transactional volume, or Dogecoin, which is obviously popular, if I'm getting transactional volume out of that, then yeah, there's something there. So I'm with you on the 250 or so. Tom Brady says capital gains tax applies to crypto. Good call. Yeah, so I guess if you struck it big, speaking of Dogecoin, which I like to call doggy coin, because that's what I thought it was in my brain until I heard somebody say it. Yeah, if you bought that for a fraction of a penny and it got to $1, I guess $1 million could be something. So good call, Tom. Mr. Stonk, I'll make it real simple. Learn how to invest like a VC with stocks in 10 seconds. He made a video about it that he's pushing. Sorry, man. Derek Ridland. What's Ben's question? I don't see it. What do you think about ABT? All right, I'll do that one for the last one of the day. Is it Abbott? Yep. All right, Abbott Labs. You guys know that this is typically not a candidate for me in health and science for my individual stock portfolio, mostly because I'm focused on technology and consumer spending. However, Abbott Laboratories, I grew up in Columbus. They had, I don't know if that was their home headquarters. We'll find out in a second. No, it was just a satellite office. But this company's been around forever. Here's your 5-year chart. I mean, that's pretty beautiful for long-term investors. There's your pandemic dip, 87 to 68. Now you're at 123. P ratio of 38, EPS of 319, and dividend on today's price of 1.5%. Last 4 quarters, hit. Financials, this is beautiful. So when you see a chart like this, which is, I believe, free on Yahoo for every company, this is exactly what companies are supposed to do, right? Revenues go up, earnings go up. Unfortunately, there are not too many new companies that can pull this off, and Abbott certainly looks to be doing that in the past 4 years. Now, the only question is, I'll take a look at what people think for this year. So this is a little interesting here. Good growth this year, 365 to 505, slows a little next year to 540. But this revenue is interesting, and this is across 22 analysts. So this isn't just like some of those other stocks we looked at with 1 or 2 people who cover it. But you have 20% growth this year, 34 billion to 41 billion. But then next year is flat. So that would be something that I'd want to investigate more. Is a COVID something or other pushing this revenue growth, and then the projection is 2022 COVID goes away or doesn't exist and they don't have that revenue. I'm not sure. But in general, let's see how this price compares. So trailing PE today, technically at 38, forward of 24.51. That's not much higher. Back in 2016 through 2014, they were under 20. But ever since basically 2017, their forward PE has been trading above 20. So I think you're kind of in a fair price scenario, maybe a smidge high, but not too bad. PEG ratio's right. PEG ratio's a little bit higher than that. How's price to sales? A little bit higher, so maybe a smidge higher. But you'd almost have to call that fairly valued in today's escalated market. Let's see what the analysts are saying here. This is TipRanks. All right, we got lots of fresh earnings. 24 days ago, you got buy of 145. There is this one hold of 122. Then you got 130, 40, basically 140, right? There's your consensus. You're at 123, plus you get the dividend. Obviously, Abbott's not a stock that goes up 100%, but that's a 5-year stock to make, that's way better than a savings account. Maybe just look into that 2022. Why is revenue flat in 22? Is there a patent that's expiring? Is COVID revenue going down because it's, slowly going away? I don't know. But it's hard to argue with a stock like that. It really is. So I hope that's helpful. Scrolling down. One more question. What do I think of Intel? And you have a great specific question. Is it worth buying a few shares? I think so. That's exactly where my brain is with it. Only if anything else, man, it's a dividend payer. I don't know if they'll ever return to glory, but it's looking better than it was looking 6 months ago. And you get 2% on that, which is better than any savings account you're going to get online right now. So buying a few shares on Intel at a P ratio of 12, I think is fine. I have almost done it about 10 times already, but I keep telling myself that I have this established TSM position and I need to just keep doubling down there. And I really do like TSM, but Intel is arguably a good deal. They need to execute their promises though. So, all right, guys, thanks for joining me in the afternoon. I hope everybody's doing well. And if you don't mind, give a like, subscribe to the channel. Thanks everybody for coming. We'll see you on the next one.